Hey friends, there's an interesting IPO in the market. It is the IPO of Paras Defence and Space Technologies Limited. Its IPO window is between 21st to 23rd September 2021. As the name suggests, it is a defense and space engineering company. And there's a lot of buzz in the market. In fact, the IPO is commanding more than 100% premium in the grey market. It means there are high chances that investors' wealth could double on the first day of listing. But remember that grey market premium is purely based on sentiments and depend upon the mood of the stock market. Hence, before you apply for the IPO, you should also look at the business of the company. So in this video, we'll analyze Paras Defence IPO, where we will discuss the business of the company, its promoters, its future growth prospect, key risk and financials. Then we'll look at the IPO details along with valuation of the company. Finally, we'll conclude if it is worth investing in the IPO or not. If you want to learn every aspect of stock market, mutual fund, insurance and financial planning, you can explore my complete course on money management. Alright, let's get started. Paras Defence is engaged in designing, developing, manufacturing and testing of wide range of defense and space engineering products and solutions. It is an indigenously designed, developed and manufactured category, that is IDDM, company in India, which means all the products are designed, developed and manufactured in India. Now let us look at the business division of Paras Defence. So it basically caters to four major divisions of the Indian defense sector. First segment is defense and space optics. Defense and space optics operations include manufacturing high precision optics for defense and space application such as your thermal imaging and space imaging system. Second segment is defense electronics. Defense electronics operations include providing a wide array of high performance computing and electronic system for defense application, including subsystem for border defense, missiles, tanks and naval applications. Third segment is EMP protection solution. EMP protection solution include designing, developing, manufacturing and commissioning various solutions for electromagnetic pulse protection. In fact, company claims that it is one of the few companies with specialized technology capabilities such as EMP protection solutions. Then fourth segment is heavy engineering. Heavy engineering for defense operation include providing heavy engineering products and solutions such as components for rocket and missiles. It is also the sole Indian supplier of critical imaging components such as your large size optics and diffraction grating for space application in India. It has two manufacturing facilities in Maharashtra located at Nerul in Navi Mumbai and Ambernath in Thane. Its Nerul facility is an advanced nanotechnology machining center for producing high quality optics and ultra precision components and is engaged in manufacturing of optics, design, development, manufacturing and integration of electronics and EMP protection products and solution. Its Ambernath facility is engaged in manufacturing of heavy engineering products such as flow form motor tubes, vacuum braced cold plates, titanium structures and assemblies, large and heavy dynamic structures with built-in automation for strategic application for various defense applications. Company is in the process of expanding its manufacturing facility located at Nerul in Navi Mumbai. As far as revenues are concerned, company derives most of its revenue under the contracts from government arm and associated entities such as defense public sector undertaking and government organization involved in space research. Its customer base include companies like Bharat Electronics Limited, Hindustan Aeronautics Limited, Bharat Dynamics Limited, Hindustan Shipyard Limited, Electronic Corporation of India Limited, Tata Consultancy Services, Solar Industry India Limited, etc. Bharat Electronics Limited is the largest contributor in the revenue with almost 15 to 18% revenue coming from BEL. Paras Defence promoter is Sharad Virji Shah, who is also the chairman of the board and has over 41 years of experience in the industry. And Munjal Shah is the managing director who has over 23 years of experience in the industry. If you look at the future growth, the budget allocation by Indian government in the four segment of defense where Paras Defence operate is expected to increase from approximately $3.21 billion in 2021 to over $14.5 billion by 2031. That's more than 10 times in the next 10 years. Now that creates a huge growth potential for the companies in the defense sector. On top of that, Indian government has a strong focus on indigenous suppliers, that is Indian companies making products in India. This is a part of Atmanirbhar Bharat initiative where the government want to reduce dependency from foreign companies and want to promote local Indian companies. Not only that, under the Make in India initiative, Indian government also want the Indian defense companies to become the global manufacturing hubs of weapons and military platforms. For example, the Department of Military Affairs has prepared a list of 101 items for which there would be an official ban on the import. It means these products would only be sourced from local companies in India. Some of the products include EMP racks, EMP filters used for protection of data, and power lines within a rack shelter room against electromagnetic pulse or interference are currently manufactured by Paras Defence. Paras Defence is looking to encash this rise in demand in defence sector for indigenous products and planning to expand its Nerul facility in Navi Mumbai to cater to the growing demand. Company is also collaborating with leading foreign technology companies in defence sector to enhance its R&D capabilities. In addition, Paras Defence is also planning to diversify its products and solution range. For example, Paras Anti-Drone Technologies aim to be one of the first indigenous anti-drone technology development companies in India and is currently collaborating with leading anti-drone technology firms to further develop its expertise in designing custom-specific modules. Its current order book by June 2021 stood at 304 crore. While there are bright growth prospects for Paras Defence, there is only one risk with the company. Majority of the business is dependent on the Indian government and its public sector undertakings. For example, BEL itself has 15 to 18% contribution in company's revenue. Now for a business, it is very important to avoid dependency on a single customer. What if tomorrow the Indian government decide to reduce its budget allocation in the defence sector? As far as competitors are concerned, there is no listed competitor for Paras Defence whose portfolio matches with its business. If you look at the revenue, it has been stagnant in last 3 years. In FY19, it was 144 crore and in FY21, it was 157 crore. Its profits are also stagnant from 15.7 crore to 18.9 crore. Hence, as far as growth is concerned in last 3 years, company's revenue and profits have been stagnant. If you look at the return on equity, it has been falling in last 3 years and the return on equity for FY21 is 9.1%. It means the profitability is on the lower side. If you look at the cash flows, its cash flow from operating activity was negative in FY19 and FY20. Now that's a red sign. The reason for negative cash flow is due to slow inventory turnover and very high receivable days. Its inventory turnover took 281 days in FY19, 305 days in FY20 and 418 days in FY21. Its trade receivable day was 197 days, 239 days and 239 days in FY21. Clearly the inventory movement is very slow and the debtors are taking too long in paying the money. Due to this, the cash flow of company is not good. Although the company expects the situation to improve in the future. In that case, the cash flow would improve. Its debt to equity is 0.45, which is comfortable. Overall, the financials for the last 3 years are not looking good. Paras Defence IPO window is between 21st to 23rd September. Its IPO price band is between 165 rupees to 175 rupee. Face value of each share is rupees 10, market lot is 85 share and minimum investment amount is 14,875 rupee. Issue size of 170 crores. Out of this, there is a fresh equity of 140 crore and remaining 30.18 crore is offered for sale where promoters are diluting their stake. So it is a very small ticket IPO with issue size of just 170.78 crore. Out of this IPO, half of the issue size has been reserved for qualified institutional buyers, 35% for retail investor and the remaining 15% for non-institutional investors. The money raised from the IPO would be used to fund its expansion plan in Navi Mumbai, fund the working capital, repay the debts and general corporate expenses. In terms of market cap, at Rs 175, the company would be valued at around 680 crore. So it is a very small company. As far as valuation is concerned, company's EPS for FY21 after equity dilution would stand at Rs 4 and at a price band of Rs 175, it would be valued at a P ratio of around 43. Overall, if we conclude, Paras Defence is in the business of designing, development, manufacturing and testing of defence and space engineering products and solutions. Now let's look at the positives and negatives of the company. First, we'll start with the positives. Paras Defense has a bright growth prospect on account of government focus on local manufacturers for defense and space equipment. There's a strong order book of 304 crore. Paras Defense is planning to expand its production capacity as well as launch new products in the future. There's a strong demand for Paras Defense shares in the grey market and current premium is more than 100%. It means there are high chances of solid listing gain. If we look at the negative side, its growth has been muted for last 3 years. Its profitability is low, its cash flow situation is bad. Overall, financials in last 3 years are not good. Moreover, there is a risk of high dependence on the Indian government for business. Also, it is a very small company with a market cap of less than 1000 crore. So it would be highly volatile and can be driven by operators. As far as valuation is concerned, its PE is 43, which can't be compared with anyone as there is no listed peer in the market. Now the ultimate question is, should you apply for this IPO? Well, I would say that if you are a short-term investor looking only for listing gain, then you can definitely go ahead with the IPO. However, since the issue size is very small, there are minute chances for allotment. If the market sentiments are positive, this share will give a solid listing gain. However, if you are a long-term investor, then it gets a bit tricky. On one side, there is a bright growth prospect, and on another side, the financials are looking bad. Now, if you go only by financials, then it is not worth investing for long term. But considering the fact that government has a lot of focus on Atmanirbhar Bharat and indigenous products, along with a solid order book, I expect the financials to improve in the future. Hence, you can also consider the share for long-term investment, but invest cautiously. So I am going to try my luck and apply for this IPO, but I am sure that I won't get the allotment. So in this video, we discussed the IPO of Paras Defense. I hope you will find this analysis useful. For more details, you can find my website link in the description. I'll see you in another video. Till then, take care.